What are investors still missing in the story?
Well, we've had a fantastic year and appreciate you noticing. There's been a lot of momentum in the business. We have successfully re-accelerated growth 3 quarters in a row. We just guided up for our Q4 and full year, both revenue and operating margin and operating income targets. So the performance in the business is incredibly strong right now, and we're just getting the message out there that the Box Content Cloud is being used by over 100,000 customers to power their digital transformation and how they manage and secure all of their most important content. And we think that's starting to get reflected in the stock.
Yeah, so your growth is something that activist investors had taken issue with. And earlier this week, we saw Jack Dorsey step down as Twitter CEO. He had faced pressure from Elliott Management. You actually won a proxy battle earlier this year against Starboard. Have you done enough to get Box back to growth? 3 quarters of consecutive growth. Has Starboard backed off in calling for you to step down? Are you still talking to them?
Can't talk too much about the Starboard conversations, but we were really happy with the shareholder vote, obviously, just earlier in the fall, and shareholders obviously overwhelmingly voted for our board of directors and our path forward and our strategy. That said, we remain collaborative with all of our shareholders. So we want feedback from any shareholder on ways that we can improve the business and in areas of capital allocation and whatnot. We just announced the $200 million share repurchase program in the earnings call yesterday. Some of that was driven by feedback that we heard from shareholders. So we will continue to be very open and collaborative with all of our shareholders. But we believe the strategy that we've laid out and now that we're executing on is very successfully playing out for both the company and shareholders.
Hey, Aaron. Good morning. It's John. So a couple of the most interesting things to me about your quarter were the deals, volume of deals above $100,000, up 56% year over year, and adoption of suites. So give us some color on what's driving large deal adoption and perhaps bigger wallet sizes for you guys and how sustainable that is, how much your sales force and partnerships have to do to keep that going.
Yeah, so I think as you folks have seen, and as obviously the broader market has seen, there's a number of massive trends happening in the technology industry that's now affecting the global kind of workforce and enterprise adoption patterns. So you've got hybrid work, you have digital transformation, and you have cybersecurity challenges that every large organization is facing. And so when you think about those 3 challenges, content sits at the center of how companies are going to be able to work in the future. It's how you share your media assets, your contracts, your financial data. And so companies are looking for modern solutions to help them manage their most important content. And that's where the Box Content Cloud comes in. So we saw incredibly healthy demand in Q3, as you noted, 56% growth on our $100,000 deal segment, which is representative of again, a healthy portion of the demand that we're seeing in Box. And that's just driven by enterprises making strategic bets to manage their content in a more secure and more scalable and broader way through their organization. And that's where Box is playing.
And there are several different ways that customers have to deal with that content. I mean, Adobe's, for example, got their own cloud and storage capabilities attached to their apps. Sometimes you guys end up in a menu next to OneDrive, Dropbox, and others. Strategically, what can you do to make sure that you're either the primary choice or maybe even that you get locked in with that customer before that drop down, or it's really not a drop down anymore, that menu choice happens because you're in the lead on the relationship?
Yeah, no, it's a great question. So, and this is really where the strategy has transformed over the past couple of years. So when we launched the company, it was about secure sharing and collaboration. Then we expanded into content management and data governance and data security. And over the past year, we've expanded the vision even further. So our content cloud strategy is to power the full life cycle of content, from the moment that you ingest your data to automating workflows and securing content. We just entered the e-signature market with Box Sign. We've seen tremendous early adoption and demand for our e-signature solutions. We're going deeper in workflow automation, and ultimately our platform then can integrate with every other technology that our customers are leveraging, whether that's Salesforce.com, Slack, Microsoft Teams, Zoom, WebEx, IBM's technology, and many more.